G'day guys, welcome back to the channel. Hope you are all doing well. Plenty happening out there in Bitcoin land. We're just sort of grinding away here, trying to find a bottom and to see if everything contagion-wise that has occurred over the last 6 months is nearing completion. So only time is going to tell us the answer here. But you know, as I've said plenty of times, it's starting to walk like a duck and quack like a duck. So, you know, the bottom is certainly near, I think, now. Let's jump right in today to some news pieces from the last week. We've had the Central Bank of Europe drop this massive paper, basically. And you can see the link there. You're welcome to check this out online and read the full piece, but this is it would seem the attack you phase. And you know, I've sort of been going on, or I've had an inkling that for a little while maybe a part of FTX was perhaps a state attack. We've also had some unusual things sort of progressing forward with mining hash rate. And I just don't know what it's going to take for these governments to understand that they can't actually stop Bitcoin. It's just not stoppable. It's decentralized. It's completely decentralized all over the world. But here is the Central Bank of Europe. The apparent stabilization of Bitcoin's value is likely to be an artificially induced last gasp before the crypto asset embarks on a road to irrelevance. This ECB blog looks at where Bitcoin stands amid widespread volatility in the crypto markets. Again, it's a sad state of affairs when you have central banks start to realize that Bitcoin is in fact going to undermine their ability to manipulate and be corrupt. Bitcoin puts the power back into the hands of the people, and that's probably why it's going to be successful. So, yeah. The rational root here just throws up this chart straight away when this gets released, and this will obviously go down in the Bitcoin is dead obituaries website, which I showed you a couple of weeks ago. But here you can see the euro versus Bitcoin. I got to be honest with you, it's not looking too good for the euro here. Yeah, it's getting pretty cheap to buy those euros. So yeah, this is the exact same chart for basically everything against Bitcoin. Bitcoin, you know, is sucking the air out of every other currency, every other asset. It's just a volatile process. You've just got to be patient. That's the name of the game. We also had this week an enormous influx, or a release, I think is probably the better term, of OpenAI. And GPT is really quite an incredible piece of software, and it's open, which I don't know if is good or bad yet, and I don't think anyone's going to really know the implications of AI for a little while longer. But if you go on, it's worth going on and having a bit of a play. The knowledge and the sort of detail and the seeming accuracy of what it can produce based on your request is, you know, something to behold. I think it's getting kind of scary. And as Jeff Booth always has said, technology is inherently deflationary. It's basically just chopping out the need for like human interaction. And our productivity should theoretically go through the roof. But along with that comes, you know, some unusual hills to climb, such as, you know, we're going to be losing a lot of jobs out there because, you know, even you can think of any industry, literally any industry, and you can even go as far as accounting or lawyers or anything. AI, if it can even do referencing, which I'm probably sure it's not far away from being able to do, think of the impact here. It can write code for you. It can write algorithms. It can basically automate and speed up every element of your life on the internet. So, I mean, it's huge. Now, interestingly, it does seem to know a little bit about Bitcoin. And obviously it's scraping the entire internet here, but the question posed by David Zell in this case was, convince me that Bitcoin is good for the world. Now, you can pause and read through the full detailed answers here, the 4 points, but I'm just going to go over the 4 points basically in a quick way. So number 1, Bitcoin allows for financial inclusion. Well, that's correct. AI's got that right. Number 2, Bitcoin can promote economic freedom. It certainly can. And we've looked at that in the last video. If you want to check that out, go ahead. Number 3, Bitcoin can facilitate international trade. That's true. We know that for a fact. It is money for enemies. And number 4, Bitcoin can provide a hedge against inflation. That is true. It is a hedge against monetary inflation. So, you got to give it to old AI here, GPT. Pretty impressive little setup for Bitcoin. We've had a change in hash difficulty because things are getting crazy out there for the miners. Times are tough. These prices are hurting miners, and there's no doubt about that. They're being forced to sell basically everything they mine. And again, unless you are mining at nearly zero input cost for energy, you're going to battle in this game. Over time, you're going to have too many periods of long drawdowns. And that's fine. All it's going to do is skew towards energy production. And that's fantastic for the world. That's really what we want. But if you look at the chart here, you can see the orange is the difficulty, the hash rate, sorry. And you can see this last phase, we just had a big downwards adjustment. So either miners are turning their machines off, so they can not be just blowing cash. And it's going to take a little bit of time to grind out of this phase, I think. And we're looking for exhaustion of sellers. That's how we form a bottom, is exhaustion of sellers, and where hodlers like me, or perhaps like you, are willing to buy at a price and set a floor in the market. I think that's around here, but only time will tell. So yeah, interesting to keep an eye on the hash rate, definitely. Just to put some context on to the mining stack here, if you are a miner or you've ever wanted to mine, and it certainly sounds attractive in bull markets, don't get me wrong, the profits are incredible, but in down markets like the last 12 months that we've had, it is very, very, very tough. And this is an S19, this is an example of an S19J Pro, which is one of the most efficient and latest generation miners. Look at the profitability. It's not there at all. So it's very tricky for these guys right now. Average US industrial power price there in the yellow line, and the break-even power price for this miner, which is new tech, they're underwater. They're underwater. So hence why we've had the down in hash rate and the down in difficulty adjustment. This is just Bitcoin bringing the equilibrium back to the equilibrium. So it's a beautiful process. The difficulty adjustment is by far the greatest innovation on Bitcoin, I think, and it's certainly worth digging into that. Energy companies certainly are getting whiff of the benefits of Bitcoin, and ERCOT here have been doing a lot of work with Bitcoin miners over the last sort of couple of years. They put in this assessment that basically Bitcoin miners help to control their loads and spikes in peak demand times. So basically what the Bitcoin miners do is smooth out the peaks and the troughs in demand for energy. And it's one of those really tough things. You can't just, energy is one of those things that is either in high demand or is in low demand, and you can't really control the bandwidth that the energy is coming through the wires. It's there. If you're creating the energy, it is there, ready to be used. And if it's not used, it's just lost. It's just unused and lost. So the energy companies are getting a massive benefit if they mine Bitcoin, because their lost energy or their lower demand times can certainly still be profitable for them. Forever and ever, there's always bad press and FUD against Bitcoin mining, and I'm sure that will persist for a little bit longer until all of the energy companies start to realize that this is their best way out, and also then the green folks realize that this is their best way to innovation, to greening the world, if you want. So Bitcoin doesn't really use much energy comparatively to the world, and you can see that right here. It's got a long way to go, and it needs to keep chewing into this, because its growth and its hash, its consumption of energy basically equals its security. So, anyone who's holding Bitcoin or plans to hold Bitcoin should certainly not be afraid of Bitcoin using energy. It is an essential part of the process, and proof of work is everything in this world. And I think that surely you can see that now more than ever. Proof of work is relevant to every area of your life, without a doubt. Some interesting news from the CFTC here, and Michael Saylor puts out this piece. He's all over this. He's been saying for years that Bitcoin is the only commodity and everything else is a security. So interesting points here from the CFTC chair, Rostin Benham. Today at Princeton, or as Michael Saylor says here, today at Princeton, CFTC chair Rostin Benham said that the only cryptocurrency that should be viewed as a commodity is Bitcoin, walking back from previous remarks made in October when he suggested Ether may also be a commodity. So this I'm bringing up, I think it's really relevant because of the fair distribution of Bitcoin from its inception. It's been fair, as in it's been available to anyone at any stage. There has been no pre-allocation of Bitcoin. So it's been a fair beginning. Ether, on the other hand, had 70% of its total coins pre-mined and given to the Ether Foundation, which is Vitalik's mob. So if you think Ether's fair, you just don't really know what you're talking about. Now, why this is important is because over the course of the next year and probably 2 years, and as we move into the next proper bull market, this is all going to come to head. Now with the FTX stuff has happened, all of this has been brought forward, I would say. The risk now of doing trading or planning to hold altcoins has gone through the roof. Yes, they will still be around, sadly. And it's going to take a few more cycles to wash Ethereum out, but Ethereum will go out eventually. Risk adjusted. You may get less returns as a multiplier on Bitcoin, but if it's classified as the only commodity, you need to see that as an enormous risk reduction comparatively to these other ones. Ether is so risky comparatively. Ether is certainly a security. That's been proven, quite frankly. And as much money as they throw at politicians to lobby that it's a commodity, they might get through with it, but I doubt it, hence the risk. And obviously the crazy complexity of Ethereum doesn't even really work. When there's any sort of volume, the prices go parabolic just to move your Ethereum around. It's just insane. So it doesn't really function at all. It certainly doesn't promise what you've been promised with Ethereum. On top of that, the stakers who went into the proof of stake system, they can't even get their Ethereum out. It's locked in there, and the foundation won't even write code. They haven't even written code to release your staked Ether. So yeah, congratulations, you're getting 3% return, or whatever the percentage is, in a yield type arrangement that you can't even get your money out of. That was good. Not to mention that it's been completely centralized. Ether, it's completely centralized. So anyone tells you that it's decentralized has no clue. It is completely centralized and is basically under government control because of OFAC compliance. The staking system is centralized, and hence it is It is literally at the beck and call of the government. If they want to sanction something, it'll be sanctioned. Ethereum is not decentralized, so don't fall for that trick. Be smart. If you go to invest in the space, invest in Bitcoin and be patient and humble, and don't let the marketers scam you out of your cash. This is a fantastic chart from Murad. He is an OG in the space. And I think, more and more people are really starting to wrap their head around the oscillations of Bitcoin. And this chart, he's shown this absolutely fantastically. Basically, we operate in 4-year cycles, which we know because of the halving process. You can see here how these cycles overlap. It's ironic, and maybe it's not ironic in the end. And only time, again, is going to tell us if we have a rhythm that we can follow. If you look at the last couple of cycles here, the 2014 cycle lasted for exactly 4 years. From the top to the top. From the bottom to the bottom. From the bottom of that cycle to the bottom of the next cycle was exactly 4 years. Then ironically, the top from the previous bull run to the one that we've just had was also exactly 4 years. Then the bottom, the low point, to now it has been 4 years. So we've had the exact same amount of time occur, and hence why you've got to consider that we may be at the bottom. It doesn't feel like a great place to buy. I know that. And there's a lot of bears out there telling you that it's going to 10K. And that's possible, of course. But it could also give you a God candle soon, a big green one, and you're going to be chasing your tail. So to accumulate something here, I think is the way to go. Building a DCA position at these prices is potentially a thank yourself in the future moment. So yeah, look at that. Look at that rhythm. Whew. Willy Woo, always, he's one of the first Bitcoin on-chain analysts. And I follow him. I like his work. I think he is, I think his heart's in the right place. He gets a lot of flack, but I think his heart's in the right place. This is another chart that he's produced. It's only just been released, but you can see here that he calls this the Bitcoin Value Index. And it's basically a combination of the MRVR, which was produced by Murad, whose chart we just saw, the investor capitalization by ARK Invest, which is Cathie Wood, and a volatility valuation, which he hasn't actually yet published. But basically, when you combine a lot of these factors, you get some really interesting data. And you can see here that, again, this data all intersects perfectly with the low points in cycles, and ironically, the high points in cycles. So if you are just simply to follow some of these indicators, these signals, and just buy at, when it hits this lower band, like it has in the past, and then you sell when it hits the upper band, I'm sure that strategy, if it was going to be a strategy for trading, would be quite profitable. Now we've double tapped here at this stage, and it's going to be interesting to see if we start to climb out. But as I've said, anything is possible in this time of the world, and 2023 for macro is certainly going to be interesting, I think, to say the least. But it's certainly worth considering. And again, I stress this, I sound like a broken record. Now is a fantastic time to be DCAing. Came across this very, very interesting chart, and partly this is an expression, and it's visualized here really well, of why Bitcoin was invented. If you go right back to the start, Satoshi basically suggested that the current monetary system allows for corruption and unfair seigniorage from those in control. So it's like we live in a giant Cantillon effect, and most people can't even see the inflation that happens from them. It's theft. It's thieving from your hard-earned cash is inflation. It's very, very, it's insidious, and it's very sad. But in the debt-ridden society that we live in now, they're forced to try to keep growing the system via credit, new credit. And this chart shows that the Fed funds rate is the blue line. Basically, Bitcoin seems to only go up when there's loose monetary conditions. And when the rate's going up, which obviously the Fed funds rates are going up, Bitcoin tends to be in sort of semi-decline. Now, obviously that's not always the case, as you can see with 2017 bull market. But for the rest of the time, there's a pretty good correlation, particularly with this last cycle. So yeah, it's going to be interesting to see if this truly is correlated to like money and easy money, and obviously credit availability. So, you know, when they do turn, and they will turn because they can't afford to keep rates high forever, it's going to be, I think Bitcoin's probably going to go bang, and that's going to be a time that you'll be very, very happy that you bought at these prices. So again, we're looking at timing, 4 years. So you can see here, we are the red line, and this is the drawdown, again, rational root. I just love these charts. This is an overlay again of where we're at. We haven't hit our full capitulation based on previous cycles, which was sort of 86, 84%. We're at about 80% now, our drawdown from the top. I think that's probably, you know, that's an enormous drawdown. And if you are unhappy with missing out on, say, let's say we go down a couple more percent, I mean, it doesn't really matter now, quite frankly. These are just phenomenal prices to have built a position, and I think this shows. I feel like I'm trying to drill into you how this process works, the cycles. I mean, it's pretty obvious that we're getting close. You know, another month, maybe into January, or you know, we may have had our low in November. But either way, building a position here is a smart move. And people seem to know this, because look at these addresses with with a balance of over 1 Bitcoin. It is going parabolic. People are frothing that they can get their position in this asset at these prices. And if you know, you know, and if you can get one, if you can work hard and you can build a position to 1, you will be very, very happy. It's going to be a very valuable commodity to hold in the future. Hold it for as long as you can. Make it a legacy piece. Give it to your kids. Split it up. Give it to your grandkids. But just realize how valuable it is. And it's only valuable if you hold it in a sovereign manner. So take it and put it on a hardware wallet, and you store that baby nice and safe. And you watch this adoption grow. It is a beautiful thing to see. So adoption is really how Bitcoin works. And again, this is from Willy Woo. And I probably have shown something similar to this before, but Bitcoin, we're still so early, and it's very, very hard to remain focused that we're early, because I know I am in this deep Bitcoin world every day of my life. Every waking hour, I'm learning, reading about Bitcoin. And I think obviously a lot of people are as well, but there's just no one. Because when I speak to folks, friends, normies, when I speak to people out there, they have no clue. They They think it's a genuine Ponzi. And sometimes you just have to give up on trying to get them over the line. They're just going to need more time. They're going to need more cycles. They're going to need to see the price go back up again. And all you want to do is be there for when they're ready to learn. You just need to be there. That's all. If you've tried to tell them, that's all you can do. You can't jam it down their throat. Some people you can, but others you can't. And you just need to be patient with them. But this is an adoption curve, as you can see. We've got the population and internet users, and now Bitcoin at the bottom. Bitcoin took 6 months to get to 1,000 users, 5 years to find 1 million users. Today, 13.8 years of inception, it has 300 million plus users, which is 4% of the world. At current growth rates, 1 billion users will be hit in the next 3 years. That's 12% of the world. Its growth is going to continue. It's flying in third world countries. It's almost unbelievable the use and adoption gain it's getting just through the Lightning Network alone. But that's something I think we should all be a part of. We've got an opportunity to be a part of this. It's a very unique time to be in at the early stages of a monetary asset being introduced into the world. Something you want to potentially think about. When I say it's being adopted in third world countries, I think probably a better term is emerging markets, where there are dictators and where there are, high inflation and shocking conditions for people who don't have bank accounts, who don't have anything. Look at this clip here and you can just see the ease. Everyone's got a mobile out there. And look at the ease of which people can live their life and transact. They've got a wallet on their phone. Elon's put satellites up above them. Everyone's got the internet. Everyone can get a phone now. It's really revolutionizing the world, and the future looks really bright, I think, for some of these emerging markets. Sort of much like OpenAI, GPT, which we spoke about before, look at how an open network actually works and grows. It's like a living organism, and Bitcoin is the most open asset there is, or open network there is. It's available to every person on the planet. There is no barriers to entry, none. So, its adoption is purely voluntary. There's no coercion to use it, and there's no coercion to store it. It's just an open asset network that continues to grow, and its growth is mind-blowing. Look at this organism grow. This is the open network that is Bitcoin. It's just so beautiful to watch. So a little bit of a shorter video today, plenty to keep our eye on. I'll try and put another video out this week, midweek, for some updates and some more detailed information regarding Bitcoin, probably a little bit about the halving. But I'm going to leave you with Senator Cynthia Lummis. She is sitting in the big chairs up there in the Senate. She's batting for Bitcoin. You think of that though, just think about that. No one's incentivizing her to do it. No one's paying her. There's no CEO. There's no lobbying. There's no nothing. Bitcoin is just self-propelling itself via incentives into everyone's mind space. It's rent-free in people's heads. And once you get it, once you get the benefits of how big this can be, you realize very, very quickly that it's something you want to get your head around and hold. If not for you, for your kids. So thanks again for watching. I really do appreciate it. Hit the like button, share the video. Come on, help me out here. And I'll leave you with Cynthia here. Enjoy. Have a great week. See you later.
Here, who will oversee digital assets?
Both. The Commodity Futures Trading Commission will definitely have Bitcoin, because Bitcoin is clearly a commodity. It is fully decentralized. And then other assets will probably be in large part at the SEC. So we're going to have to provide them with adequate personnel and tools and guidance and statutes, and they'll have to make regulations that will allow them to conduct the adequate consumer protections that are necessary with regard to cryptocurrencies that behave like securities.
Senator, it's a great interview. We so appreciate you answering the questions that investors have. Thanks very much for being here, and come back soon. Thank you so much.